Patrick Findaro, co-founder at Vetted Biz. Excited to have on Chris Seman, who is the president and COO of Strategic Franchising. They own 5 franchise brands. Chris was working at a franchisor, became a franchisee, went back to working at the franchise brand. Chris, thanks so much for joining today.
Well, hey, thanks for having me, Patrick. I appreciate it.
Maybe I'd love to dive into some of your brands and kind of how the economic conditions are affecting your franchisees and outlook across the brands. But before we do that, tell us a little bit about your career.
Well, I've been in franchising now. It's just going to be my 22nd year. I got involved in franchising kind of as an aside. I had gone through some career changes back earlier in my career, and had been heavily involved in the service businesses, and had hundreds of employees, corner office, company car, all that kind of stuff. And but it was a 24/7 type of gig. You were running every single day, dealing with your clients, your customers, your employees, and I went through some real evaluation of what I wanted to do with my life, and thought I needed to take a step back, figure it out. I got approached by this franchise company out of Ann Arbor, Michigan, that just wanted somebody to help 30, 35 small business owners become successful in their business. And, I thought I would do it for a year or two and kind of recharge my batteries. And turns out I came into it, fell in love with franchising. And 22 years later, here I am, still in it and still excited as ever to be in franchising. But it's been one of those, it's down a straight line journey is how they say. It's, you think you're going in one direction, and then, all of a sudden you make some right turns. And in my case, those right turns led me in a path that was something very fulfilling for me, at least. So I was thankful for sure.
And I think what you said, like corner office, managing hundreds of people, direct reports, tons of direct reports under them, and then tons of reports under them. And it's like the more promotions you get, especially if you're married and you have a family, like you work more hours and you travel more.
Yeah.
And I think as an entrepreneur, speaking for myself as well as many franchisees, like you oftentimes want to control your time and maybe spend more money on employees so you have more of your free time with your family. But in the corporate setting, like you're going up or you're out. Like there's no chilling at the level. You're going up, or it's really difficult to just kind of stay in that same position.
Yeah, I've never been really good at the maintaining component of it anyways. But yeah, it's, as you talk about what's a good work-life balance. And, for me, franchising's always kind of fit into that. It fit in a time when my sons were younger. And then when I came down here to Cincinnati to work with our brand Caring Transitions as the president there, my sons had went away to college, and I had found that they needed me a lot less than except when, the funds were running low in the bank account. So I had a lot more time to really dig into relatively what Caring Transitions at the time was pretty much in the startup mode still. And it really gave me the time to spend with the franchise owners, the systems, the processes, and the team really building all that out. So yeah, you're right. It's you got to be in the right stage of your life. And sometimes that corporate ladder, it not only is it slippery and treacherous, it can also bring a lot of cracks in the rest of your life. And how do you balance that?
Yeah. And I think a lot of things are out of your control, where there could be a merger or some consolidation. And it's like, you could be killing it and you had to put all the time, your manager loves you, but at the end of the day, like you're out. Where if you're an entrepreneur or franchisee, like you can make adjustments and it's your business, and you can kind of adjust to the economic conditions. And, with a franchise, you have all the franchisees that kind of are, and with the franchisor is a no consolidated information and making adjustments. And I'm curious to hear, like, what do you see for 2023? I know your brands are kind of spread out in terms of senior care, the pet space, but a lot of service related brands. What are you seeing for 2023 and beyond?
Well, what we really look at is all of our businesses is how do you make them a service that is more essential than non-essential. And, what do you get involved in a niche that really is going to be something that the consumer is going to look at, even if their financial difficult situation is a little bit different than it was 6 months before, it's going to be 12 months later. Would you delay these purchases? And, everything you said, the senior transitions to the pet food, you're going to keep feeding your dog. And you need to take care of mom and make sure she's in a safe and healthy environment, no matter what's going on. And a lot of our services, if you look at like Caring Transitions, just going alphabetically, something that really is focusing in 2023 is that a lot of what we do is we liquidate the items you don't need when you're transitioning to a newer home. So as you get older, you go for that big family home down to maybe a small condo or a small apartment. you don't need all that stuff. And what you find out is most of your family doesn't want that stuff either. So
yeah, I mean that takes like probably 2 or 3 years of the kids being nice, saying, oh, maybe I want it later.
Maybe, yeah, it's a lot of maybes, and it ends up being, oh God, no. And they have a dining room. Everyone has a dining room table. Everyone has furniture. All these kind of things that you think that you can leave behind. And what we do is we reposition it, get into a family and a home that does need it, and that money that you get from that can help fund other things that you want to do. And one of the things that's really great for Caring Transitions is we're doing a lot of investment in our online auction platform that would really allow these items to be more accessible to people who are maybe under a financial situation where, hey, the option of buying the new furniture isn't as keen right now as it would have been a year ago. So why not have an option and an opportunity to buy some really great stuff that's got a lot of life left in it, that's really, your cost-wise is going to be significant savings over what you would have had by buying new. And you kind of reposition what is the market. And, it's not always, we talk about online auctions and estate sales. A lot of times people focus on the collectibles, but, we really focus in on the everyday home and the everyday items. And, there's some treasures in there. I can tell you crazy stories about some of the cool stuff that we've helped families sell. But for the most part, it's, your standard stuff that every home has and every home needs. So, we're really...
So there's no like physical garage sale, estate sale that people are coming to the house?
Well, we used to have those. That used to be the primary method that we would do these. It was a physical estate sale. They would come to the house. They would visit the house. And COVID, did a great job of killing that market, because, you couldn't hold them. So we switched, the majority of our stuff. We still do physical estate sales, but the majority of our stuff is online. And
it makes a lot of sense with like your physical estate sale. What you're catering to people within like 5 miles, 10 miles. That can be fine for furniture, but everything else, like ideally, you want a lot more buyers to drive up the price and like have a better price for whatever good you're selling.
Yeah, we ship all over the world now, which is interesting. I mean, we can do things like, one of my favorite ones was there was a very famous surfboard manufacturer out of Hawaii who he had like 80 to 100 surfboards that he had personally done that he just needed to downsize. He needed to get in a situation that was better for his health. But this guy is world famous in the surf world. I mean, I don't
know. I'm a surfer. Would I know this guy's name?
Probably. And I apologize. I didn't get it for you, but I can always send it to you later. Yeah. But, we ship surfboards to New Zealand, South Africa, some of the major surf areas around the world. And it's one of those avenues that you just can't do. If we had just had a Hawaii physical estate sale, it just would have been the local folks and, would have been.
Yeah. Instead of paying maybe $1,500, $2,000 plus for the boards, like Hawaii, they paid just $200, $300.
Yeah, exactly.
You're not going to get the best value.
Yeah. And some of those boards went for way more than that. I guess this guy is again, I'm from the Midwest and, there's not a lot of surfing in Ohio. So, I'm not as quite up on my surf stuff as I would be if I lived on a coast, but, he was very famous and a great guy, and we're happy to help him and his family out.
Very cool. And Caring Transitions, like, so if someone wants to start at Caring Transitions, like, how much money are we talking about?
Well, it's less than $100,000. I mean, to get it up and running. I mean, the beautiful thing about it is because we work out of the client's home. So when we do the work, even when we're doing a physical estate sale, the pickup will be at the client's residence. So you don't have to have big warehouse space, storage space, all the other things that are going to happen. So your upfront startup costs are not that significant. It's a $44.9 franchise fee, and then you get involved in what other expenses you need. You probably want a vehicle for yourself. You need employees, but the employees are paid when the clients have work. And you go out and do a lot of networking with your community. You're actively engaged in the senior community space, such things like senior living communities, assisted living communities, over 55 communities. So there's not a lot of advertising dollars in this particular business, and all the other stuff, your website, everything like that, that's all part and parcel of the package that you get with Caring Transitions. So it's a relatively easy startup package. If you look real quick, I'll do a quick aside. Strategic franchising is really designed. What we really went into was franchising for everybody. Business ownership opportunities for everybody. A lot of business opportunities can be millions of dollars. And what we really wanted to look at is how could we get the average middle-class person who's looking for that opportunity in business.
Well said. And I mean, any other information on the financial side? Like, I imagine there's like a period of, 1-2 years for the consumers in that local market to really know, and then the word of mouth, and you're just getting tons of referrals coming in. But any information on the further financials? You mentioned the startup cost, but I'd be curious to hear, as I'm sure some of our viewers and listeners too.
Yeah, I mean, as you go through and one of the things that's exciting about Caring Transitions is really the revenue growth, because we've now kind of expanded across the country and we have a little bit of presence in most senior living communities. We have at least a reputation to carry you with, and the speed to getting your first project is significantly been shortened because of the web presence and some of those other things. So you can get to work relatively quickly. And, as you get to 3 to 5 year mark, your average, our average location's doing over, 350 to 500,000, depending on the part and parcel of the country, how long they've been open, and goes from there. And that, allows you to return a relatively nice income back to yourself. And is what we do is there's a couple different programs we work with people to make sure that they hit their goals and objectives. And, we're heavily into what we believe is critical is we do goal setting, financial planning from the first day you sign your franchise agreement with us. And it's based on a formula of how much money you want to make is really related back into the behaviors. So if you want to make double what the average person does, we actually show you how to do it. And you can decide if you want to put that kind of commitment and time into the business and grow it from there. So it's one we do for all 5 of our brands, but that was just some of the results coming out of Caring Transition. So
yeah, I like that. So I mean, the expectations are set, because from what I see, when there's issues between the franchisor and franchisee, it's largely mis-expectations or miscommunication or just infrequent communication.
Yeah, 100%. And I mean, it's like all relationships, and that's what I try to get when we bring people into the franchisor side for the first time. We really talk about this as a relationship. And just like how you're not going to have a great relationship with your spouse if you only talk to them once every other month. You have to stay in contact with them, and then you have to be aligned with what their goals are. We tell you where you should be, but we want to align with your goals, though, because, everyone is in this business for themselves, their family. We were talking a little bit earlier. One thing that's really huge for people is, control of their lifestyle and control of their time. And we want to make sure that they have that as well. And some people will trade off a little bit of revenue to have more control of their time. And you have to, by having a relationship, and we work on that consistently. Not only do we do that just as part of a philosophy and a strategy, we hold regular monthly trainings with all of our business coaches, and we call it coaching for results. And that's really about building that relationship and driving that connection between the franchisor and the franchisee, because if you don't, no one's going to be successful, us included.
So Chris, are there, out of the 5 brands, do you have some opportunities where it could be like semi-absentee, where the person's not working day to day in the business, or maybe it's 10, 20 hours a week that they're allocating?
Well, most of our businesses are full-time energy and effort if you want to hit the targets. Probably the best business we have that we do have a part-time opportunity for is our growth coach, was a business coaching opportunity. And that tends to appeal to people who've been through their career and they've had business success. Now they want to share it. And because there's almost no overhead with that particular business, if you decide you want to put in 15, 20 hours, there's a business that you can still be successful with. And that tends to be our biggest part-time business. As far as absentee, all the businesses, the other 4 businesses need a full-time manager. And you can go down that route once you kind of feel comfortable that you understand the business enough to work with your management.
Yeah. So, I mean, they should grind it, 18, 24 months, and then, hit those revenue objectives, have enough earnings, and then sure, they can put in a full-time manager.
Yeah. And then you're going to knock down. And, we talk to people because you remember when you're doing business for everybody, we're also attracting a lot of people who are not necessarily coming from a business background. So what we do is we work with people to say, okay, it's 18, 24 months, you get the right person in place, but you have to have checks and balances in place. And, certain things like, just things that, if you've owned your own business seem very common sense, but, you as the owner, you control the money. You write the checks, you approve the invoices. Yes. So we have all this structure in place because we understand what people are going through and some of the biggest mistakes you can make when you open your business for the first time and you haven't done it before. So.
Yeah, that's well said. A lot of basic things that you've seen it so many time and time again. And then across the brands too, there's some nice shared knowledge that you could probably, if something's working, even though it's in the pet space, but it's on the client delivery side, client servicing side, then that can translate to some of the other franchise brands on how kind of the SOP, the standard operating procedure, is for handling like the customer relationship.
100%. That's why, like we talked about the training that we do around coaching for results. Why, that's an internal program that doesn't necessarily visibly impact franchise owners, but it does because we share best practices across all 5 brands. And, how do you get more effective in communicating? How do you get more effective in helping your franchise owners be more successful and achieve their goals? And, the thing that's beautiful about franchising, and the thing that makes me so excited about franchising, it is really the power of the group. And, you have this ability and this, you can it's almost like the internet, pre-internet, you would throw an idea out and you'd have 300 people all putting together their brain power, their expertise, and their experiences together to help with a solution that's really going to be much better than if you was just me sitting up here in the office trying to say, hey, this is what you're going to do. And we don't believe in that. We do really believe in that power of the group and having that synergy and internally, and then making sure that expands externally as well. And that's why it's one of the fluid relationship issues in franchising that makes it so interesting.
And how do you divide your brand? I mean, I'm sure you have your hands full with 5 brands under you. Does each one have a brand president, or how are you guys kind of split up?
Yeah, they all have brand presidents, and they're all individual. We while we're doing all the synergy, but they're also individual brand business units, so that they can really focus in on what it is that they need to do to help their franchise owners be successful. I work with the presidents in helping develop them and their skill sets. And then we have our shared resources, which I do all of our shared resources. And, the advantage of us by having these shared resources, so like accounting, legal, all these departments, marketing, by sharing those resources, that means each brand spends less on administrative tasks and more of that money can then be reapplied to operations, coaching, things that are actually going to impact franchise results.
And these 5 brands, were they started organically, or have you gone through acquisition, like growing from 4 brands to 5 brands? Did you incubate that within strategic franchising, or did you go out and buy an existing brand?
The 4 of them were organically developed, and then one, Pet Wants, was acquired from a woman here in Cincinnati. Actually founded it, and it's launched it. And she actually had tried to franchise it, and was just really running into entrepreneurs are amazing individuals. They're creative, they're very driven, but working with franchise owners who want more details and specifics and processes and have very particular points of view of their own. A lot of entrepreneurs struggle with that, and we got just this great opportunity to help her on the franchising side. And she brought in over the business ideas and the best practices. We just had to put it in a format and a formula that a franchise owner could follow, instead of it all being up in her head, which she was very adamant about how to do it, but wasn't necessarily adamant about writing things down. So, some of those.
Yeah, no, I think it's tough to make that transition. I think a lot of entrepreneurs are oversold. Like, you can franchise your business, and there's a lot of people that will franchise a business that's not even profitable.
Yeah.
And sell them a package to create FDDs, all the documents to go out and sell it. But essentially, I guess the entrepreneur needs to decide, like, they love this industry, they love, what they're doing. And if they're going to go the franchise route and continue in their executive capacity, they're basically switching to the training and licensing business. And they're not going to be spending most of their time anymore on that industry vertical.
Yeah. And it kind of comes into one of the issues that we face as a franchisor, is making sure that our team is also ultimately focused in on the consumer side as well. Because too often you lose sight of that. And, you also tend to lose sight of, like, what is it that you're doing and why you're doing it. And, one of the things that, mantra that I've always had in franchising is that if you're not focused on growing a franchisee's revenue or their franchisee's profitability, then what the heck are you doing? And it's easy to get distracted by, seeking out insurance certificates and, doing, there's just a lot of stuff here has nothing
to do. There's 2 metrics, growing revenue and profit.
Yeah.
And I guess if what you're working on or your key executives does not benefit those 2, then should be done probably by someone else, and it needs to get done, but not Chris's time as the president.
100%. And that's, it's something that seems so simple, but in business, there's just a million things to do every day. And it's the same thing we talk about with our franchise owners. It's like, you can be on Facebook for 40 hours a week, but where are you going to get customers from, and where are you going to get employees from? And I'm not saying Facebook isn't valuable. You should do that your 2, 3, 4 hours a week. but let's get offline and get in the field and get where the money is. And let's really, to help drive those relationships with customers and staff so that we're all building to the same place.
And how are you tracking the franchise, the sales, tell me, how are you tracking the sales of the franchisees across the 5 brands?
Well, we have a couple different systems depending on the brand because of the intricacies of each one. But we use
the POS software is going to be different.
Yeah, we use primarily there's a franchise CRM software. It's huge in the industry, Fran Connect, which we've customized for a couple of our brands, and that's their primary revenue tracking source. Freshcoat, on the other hand, what we have done, and we spent the last 18 months really building out our quoting software, our CRM software, and our marketing software into one concise package. We call it Smart Quote, and it's all proprietary. It's all been developed internally with our developers. And it's designed really to give them an opportunity to, like, what do you do when you get a lead, all the way to what do you do after the job is complete, and all the folks who didn't book with you, what can
so it's marketing and sales automation combined.
Yep. Yeah. So you're scheduling.
And that way the franchisee can focus on the employee side and then the customers.
Yeah. So you don't have to worry about, do I need this scheduling software? The software schedules for you. It schedules your quotes. It schedules your employees, blah, blah, all that stuff. And it's really how do you, and then that reports up into central numbers so we can see metrics that we can share back with the system. And then plus they can share them up with me and in our accounting team, CFO team, for data analysis that we can hopefully then push data back down to the franchise owners to make them more successful.
So I imagine on the painting franchise, it's probably easier calculating like basically what the earnings are, the owner's discretionary earnings essentially. But across the other brands, like how are you tracking to make sure that what they basically get from the business, and some people have a car that's corporate, pseudo personal, that's a benefit that being a business owner, you have that is run through the business as you're using it most of the time for business purposes. But how do you calculate that? Like whether someone's making, 90K, 100K, more, less, and that make sure that amount's growing year over year.
Yeah. Well, what we do outsource a P&L reporting service that, imports all of that data so that we have an easy, just instead of running 750 QuickBooks,
exactly.
This combines it so that we can get some opportunity to really, look at that a little bit better. But I would tell you that's probably not our greatest strength to see an owner discretionary income. So what would that tend to be?
It's super hard.
Yeah.
I don't think many people in the industry are able to really. I mean, businesses that are doing under $1 million in revenue or even under $2 million, like there's just going to be a lot of expenses that if it was a larger business, like wouldn't be in there, and it's kind of a judgment call, if they should be in there or not.
Yeah, well, one of the advantages of owning a small business is the tax opportunities and tax advantages, and we want you to work with your local CPA and tax attorneys to get the right blend and right mix to get all the advantages that you possibly can get. Because, like you said, I mean, you're in a service business, very, very high profit margin, but the revenue, you're not $100 million business. I mean, you're sitting here
and that's fine. Who cares about the top line? That's more a vanity metric if the bottom line is not keeping pace.
Yeah, and that's what we try to focus people on is what is their income requirements. And one of the things that we've really worked in shifting on is what are the expectation of what's possible. When I came here 11 years ago, when you're in the segment that we're in, sometimes people get in and goes, hey, if I can make $75,000 a year, I'll be thrilled. And it's like, we won't be. We want to see you double that. We want to see you continue to grow and really have that kind of success. And you can do it. And that's what's nice over the last 11 years is showing people the pathway and having people achieve and succeed, and those make.
And oftentimes, like it's like if the expectation's so out of line and like it's not going to happen in one of your 5 brands, it probably is not going to happen. Period. Like I had an investor reach out to us that didn't want to work and wanted to make his money back like within 3 years.
Yeah, that's nice.
And I'm just like, you can have like a really high risk opportunity, but I'm not going to advise you because there's something that I'm confident about in the franchise space or beyond that if you don't want to work much, like 5-10 hours a week, that you can have that type of return. And it's like setting expectations like, hey, this is what I see given what you're looking to do in your background. Like this is kind of more realistic, but the more time you allocate, generally it's going to be a lot easier to recoup your capital back in a faster time frame.
Yeah, I really like to talk to people about, one of the things I learned from one of my early mentors in franchising was that, as you really look at that first 12 months that you're going to be in business, you're going to work harder for less money than you ever have in your entire life. And if you do it right, it's the most rewarding thing you've ever done. And it sets you up for the rest of your time. And you talk about the family time, the vacations, the controlling the money, putting your kids through college. I mean, I just seen some amazing things in this business. I keep going back to one of the first people I coached at Mr. Handyman back in the my first franchise job. One of his goals was he wanted to put his kids through college, and he wanted to be able to pay for it. And he was able to put his daughter through Villanova and his son through Clemson. And he was still able to live a nice life and buy the dream car he'd always wanted. And he paid cash for it, though he didn't recommend that for various reasons. But, that was his dream. And so we excited when he was able to realize that. And that's really what you want people to focus on. And, how do you achieve that? And so that first 12 months, that's going to go by in a blink of an eye. Everything's new. Everything's exciting. Just work.
And that's going to keep their head high. And that was my dad's big goal for us, my two brothers, was to pay for college. And I'm sure, up and downs as every career has, whether you're an entrepreneur or an employee, like if you have that end goal in sight, it's super powerful and it's going to keep you going.
100%. So invest the time, invest the energy, and then you have a great return on your life. I mean, but for somebody who wants to come in here and it's like, I want to make $1 million, I don't want to work, and I don't want to invest any money. Well, that opportunity, there's a lot of people who want that opportunity.
Sign me up.
It turns out the luckiest people also tend to be the hardest working people. It's just the way it is.
And a big part, like you're investing $100,000, and you basically you're accumulating sweat equity in that first year, where you could go out and buy a resale of one of your franchise brands or another franchise, but it's going to cost you, $300K, $400K, more or less. So if you want to already be making the money, there are franchise resale opportunities, but if you want to invest less capital, you've got to put in the time.
Yeah, it's just a trade of time and money, and the opportunity's there. And again, harder you work, the luckier you're going to be, and it'll be great. I mean, and you'll find it as you go back into what are the different opportunities, when you look at an opportunity, find one that you're passionate about, that you're willing to put the work in. And, that's one of our 5 brands. Of course, we would love to talk to you at Strategic Franchising. But, reality is, if it's not, that's okay. There's
no hard feelings. I'm sure they would have learned a lot from you from the discovery process and probably got refocused on what they want.
Yeah. Because it's like, at the end of the day, I mean, if you can put the energy and the effort into that particular thing, and, when those things arise, when an employee, messes up or customer is unreasonable, I mean, it's beautiful when you're passionate about what you do. Those things don't seem to bother you that much.
Well, Chris, I think your brands that you have in your system has a much more direct conversation with the prospective franchisee than I've seen in a lot of other brands, where it's more about getting that franchise agreement signed and then having some other team deal with it, where for you you really want to make sure that this effective marriage is going to work and that they're going to be in the franchise system for quite some years.
Yeah, we have to do a lot of education, just because, again, when you pick our particular segment, when it is business for everyone, you're going to have to educate like crazy. And that means you're going to be invested and involved. And so we don't meet the folks when they're already through training. We meet them when they're investigating the brand, investigating the opportunity. And then we get to be part of that relationship all the way through as it builds up. And we'd like to continue that strongly after they come on board, so that when they have their time in here, they feel like they're successful, and they also have an opportunity to exit in a way that is either through retirement, to sell their business, pass it down as a legacy.
Yeah, pass it down to your kids.
Yeah. So all of those things, and, this is the type of business where if you're interested in that, is on a franchisor side, it's a great place to work. If you're interested from a franchisee side, it's more opportunities available for more people. And it's something I'm, very excited about, proud of the progress we've made over the last, 11 years and where we've really moved these 5 brands to. And we just, I don't know. I can't help but say I feel incredibly lucky that I got involved in the career I did when, as I talked about earlier, it was never a plan.
Well, it's a testament too that you've been with the same group for 11 years, where a lot of people in the franchise space are moving. There's always the grass is green on the other side, instead of working internally to make the environment better for everyone and pushing through and improving. So
yeah,
I think a lot of franchisees like that longevity, and as well as prospective franchisees should know who they're doing business with and the owners, who ultimately owns the company, and that there's going to be a longevity because it's a long contract that you're signing.
Yeah, 100%. And, we really kind of get into this with the idea that you have opportunities here as a franchisee and as a franchisor to make decisions and to be involved and impact communities in a way that you just wouldn't in some larger organizations. We're not a small company anymore. That's been a big change for me from, 11 years ago. We were probably a small company. Now we're a medium-sized company and, really active and all over the country and across the world now. And, you have, when you're coming in new to franchising, you have an opportunity to make an impact in a really outsized way. So that makes it very important for us to hire the right people. And it's really critical. And as well as you get in here, you get to learn so much and develop so much in a way that maybe you wouldn't in another organization. And for me personally, the reason I stuck it out for 11 years is that particular ability to make an impact on something that I'm involved in and something that I'm passionate about. And if I go to a new organization, what is it that's going to be about that organization that's going to drive my passion? And in my situation, I found that this is it, and this is where I want to be. And I've taken more responsibility on here because I want to see that grow from all of our brands and all of our franchise owners.
I love it. And what's a call to action if someone's interested in exploring franchise ownership with one of the 5 brands that you represent? What would be the best way for them to further investigate?
Well, the easiest way is to go to strategicfranchising.com. That's our website that overlays all 5 of our brands, and then it'll send you to the individual brand website that you're interested in. Something that's exciting for us is that we have we're in the middle of launching a new website for Strategic. It will be out today or tomorrow, hopefully, but within the next.
By the time this is published, it's already out.
Yeah, by the time it's published, it's already out. So strategicfranchising.com, and that'll give you a little background, but then you can dive in deeper on all the individual websites if something interests you about the 5 brands. But that kind of gives you a good overview.
Well, Chris, thanks a lot for opening up about your career trajectory, everything about strategic franchising, the brands, and definitely if you're interested in further exploring an opportunity with one of the brands, we'll include the URL in the show notes.
All right.
Chris, thanks again. Really appreciate it.
Thank you so much, Patrick. I really enjoyed it, and have a great day.
Thanks.